What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where, as always, I do a technical analysis and give you my thoughts on the ticker's coins, actually, listed up above. Your eyes are not deceiving you. You do see Shiba Inu on our list, as well as Flux. Both of those charts are presenting decent-looking setups, so I figured I'd share them with you on today's video. Kicking us off is none other than our Bitcoin daily time frame chart. What do we see here from a price action and structural perspective? Certainly a bullish look to the chart. There's no doubt about that now. This is no longer really a threat as a double top. Obviously, we've made a new higher high in here, and there are multiple daily bar closes above this breakout point, right around $23,850 per coin. You'll also notice that the support trend line is firmly acting as support, excuse me, as it should, right here on the Wednesday session. Of course, the CPI rally in the equities market helped out a bunch in terms of pushing this up and over the resistance portion of the pattern. However, we've just mentioned a lot of bullish indications. What is the obvious red flag about this chart in front of us, right? Clearly, it's the inverted hammer that printed on the Thursday session. As everything was bullish, as the buyers were really stepping up, why were the sellers able to come from the highs and beat prices all the way back down to the breakout level? Right? Think about it. The buyers finally had a chance to clear this high, clear this high, clear this high, clear this high, and they did it. The prices were up here and the volume was looking pretty good. Why were they not able to keep prices up there? To me, it's just it's a big red flag that it doesn't give me a warm and fuzzy feeling on the inside about, hey, now is the time for new money longs, right? It's like, why was the breakout so lackluster here inside of Bitcoin? Now, I'm not saying it can't go higher, right? If we can clear that upper wick, which is roughly $25,000, then look left. Remember that we have this thin structure before we start running into that overhead supply and that prior breakdown point around $28,650 per coin. On a smaller time frame, something like an hourly time frame chart, this could have been just a break, retest, and now rally off of that level. But to me, on the daily, as a daily swing trader slash position trader, you guys know that I just dollar cost average in over the long haul. But for, in terms of keeping tabs on price action, that inverted hammer strikes me as a concern. I can't get past that from a psychological perspective, right? Why were the buyers not stronger on a well-anticipated breakout, right? Everybody could see this level. That, it wasn't like it was a surprise that this was a breakout level. We had CPI rallying and the equities market rallying hard as well. Why did this not hold up is my question. That's my red flag with Bitcoin and something that I would caution you about. If we crack underneath the support trend line, we should rotate to here, $21,600 per coin, the top end of the prior balance from here, and also the neckline of what was the double top that we were at least monitoring, okay? So that's the downside target on a breach of the resistance trend line, or excuse me, support trend line. And because we're so high up in the range, I would actually start to look at it like this as well, right? Look above and fail. Target is technically the bottom end of the range. So you have tight risk, stop loss goes just above, and you have a short trade on your hands inside of Bitcoin. For us position traders, we just know that, hey, that's a bearish pattern. We're obviously not buying in that sort of instance, right? So that's Bitcoin in a nutshell for you. Let's continue along and take a look at Ethereum. What's going on here? This chart is much different, much more strength in Ethereum clearly. So follow through on the breakout from the CPI data, the Wednesday session, of course. Inverted hammer, yes, on Thursday, but just based on where it's at, it doesn't strike me as nearly as concerning as what we just saw inside of Bitcoin. And obviously now we're rallying inside of that bar. So we've got an inside bar setup, very simple. If you're a scalper, you're just waiting for a break of either the high or the low, and you're going long or short for a quick scalp with this inside bar setup here inside of Ethereum. So what else do we have, though, from a structural perspective? We're already above that flush point as compared to Bitcoin, which is trading, on a relative basis, actually not even that high. It's probably like somewhere in here, right? So Ethereum is much, much, much stronger in the crypto space. It's really leading the charge to the upside. You can clearly see that we also have, combined with the relative strength, just higher lows, right? We're supporting at the support trend line. We're making new higher highs. This chart is where you want to be if you want higher confidence longs. As of right now, I would say Bitcoin is taking a back seat to Ethereum, certainly, and hopefully that the visual difference here is just obvious as well. On breakouts and continuation, up and over roughly 1925, which is where we're trading currently. It was also this prior flush point and resistance from here. The next target, it really opens up here towards this set of highs in here around 2150. Okay, can we see a higher low pullback? Yes, absolutely. Where does it want to hold this time around? Let's go ahead and grab, where's our favorite bar? It was hiding. There it is. We need to add this level right here. As long as we have a higher low above 1780 all good inside of Ethereum. So a pullback might look like this and then get continuation. That is textbook trend continuation. So all good in Ethereum. I would only really be concerned about Ethereum moving significantly lower if we lose 1692. If we take out 1692, obviously you get the possibility for a rotation here, and then you open up the door for a head and shoulders pattern, which of course is bearish. It's obviously, very much so speculation at this point in time, but just be mindful that 1692 is a big line in the sand to the downside in Ethereum. Next up, we've got Binance Coin. What's going on here? Relative strength, just like Ethereum. This is up towards these highs. The weekly downtrend is at least neutralized here, right? We have multiple days worth of balance, and we're going sideways. So this does not strike me as even as concerning as Bitcoin, because Bitcoin made the attempt for the breakout and it failed. Whereas Binance Coin is just saying, hey, we're going to take a quick pit stop, take a breather here, and catch our breaths, right? Which is a completely different story than an outright failure like what we just saw inside of Bitcoin. So this strikes me as fine. Not overly concerned with the sideways price action here inside of Binance Coin, certainly digesting this move from in here, starting to look like a bull flag on a breach of these highs. And it's not so, well, I suppose on a daily close perspective, you've got to close a daily bar above 328. But if we were to take out these wicks on momentum, yeah, there's probably a scalp there for some upside, even if it's like midday and the daily bar has not closed above that level yet. You're right. You're not going to wait for that and say, okay, now the daily bar is closed, I'm going to scalp it for upside now. It's like, no, if you're a scalper and your time frame is reasonable, then there's reason to go long up and over those highs for a break of the balance range right there, right? So something that would ultimately look like that into the future. To the downside, we also have a very obvious area of support, right? It's just simply the flag lows, these wick lows. If we take out 311.50, look left. If we pull back, 300 is your line in the sand. Why do I say that? Because if we pull back to that, it still produces a higher low above this area right here. And we're all good from a trend continuation perspective. So please, inside of Binance Coin, exercise a little bit of patience, and I would say as long as we're above 300, bulls on parade remains the outlook. We're obviously far, far away from the support trend line. That is not coming into play, and the weekly chart has neutralized the downtrend with an equal set of highs here with this in here. So all good. Could the weekly do something like this and turn into an inverted head and shoulders? Absolutely. One step at a time, though. Just watch your balance area inside of Binance Coin for something that does this, target here, or pull back and breakdown, watch 300. 300 is your line in the sand. Next up, we've got Cardano. This one's actually starting to coil up a little bit, putting in a bullish pattern here. Very similar to Bitcoin, but notice that it did not attempt a breakout yet. So it's still coiling up in the pattern, which strikes me as a bullish implication. If we can crack that 54-cent mark, we know that there's a little ways to run into 65 cents. And that's a big deal in terms of percentage points that you're picking up if you are able to capture and take advantage of this trade effectively. So please keep an eye on Cardano. It is still kind of in this choppy range. There's no guarantee of a breakout, but if we start getting some price acceptance above 55 cents, 54 cents, game on. Game on for the upside. Let's see if this thing wants to push a little bit higher and return to its old relative strength state as it was in here. Remember, it really led the pack during this time frame, and now it's sort of the relative relative loser, I suppose, is what we would call it. But let's see if it wants to pick the steam back up. If the crypto market's going to see a little bit of a quote-unquote bottom here, a little bit of a revival and renewed interest, right, then maybe Cardano starts to get in gear, and this pattern is certainly a tight risk way to trade that. Of course, breakout entry, target is up above here, and stop loss goes underneath the support trend line, right? So the risk reward makes sense. Next up, we've got Solana. What's happening here? This is a little bit more of a range compression as opposed to an ascending triangle like what we just saw inside of Cardano, because I would draw in something that looks like this. You can see that the highs are technically getting lower as well, just indicating we are balancing, right? The market's trying to find an equilibrium, and then when that equilibrium reaches its breaking point, that's when you get some sort of move in the marketplace that does this or this. And of course, the first thought is, can we fill up one of the triangles? That is triangle number 1. This, of course, would be triangle number 2, and those are your first targets, okay? So up above, if we get to break the resistance trend line, which does look good, excuse me, apologies for that. Just based on the inverted hammer that printed, right, there's no follow through underneath the lows, green inside bar pushing back up towards those highs. If someone shorted this up here, then they're probably a trapped seller, right? They're starting to get underwater. So the breakout here can be decent if we take out that wick high into 48. After that, there's a little bit more room to run into 52, and you can see that's clearing this prior high here as well. So 48 is your next breakout level. If you're not so keen on taking the break of the resistance trend line to get there, it's a higher low pullback and then reattempt. That's where you look for this trade right here to unfold with tight risk. Stop loss goes just underneath. Downside, again, doesn't look likely as of right now, given the current bar that's unfolding. But if this were to rotate back down towards the bottom, obviously a break fills your triangle to here. 37.75 is the first number. Next up, we've got MATIC US. This is still in its decent consolidation range. This does not strike me as concerning. You can clearly see a nice uptrend is in place. Higher lows, higher lows, higher lows. And over the past couple of weeks, just really digesting and going sideways, which is A-okay because this was the relative strength monster leading the pack in this move right here, mid-July. So cooling off now, as we've been talking about for the past couple of weeks, $1 is still the breakout level. If we clear it, 117 is on the horizon. And as long as we're above this level right here at 83 cents, we are all good from a consolidation perspective. Could you make the argument that a trade could come early on a breach of this micro range? Absolutely. But just bear in mind, if you're trading this range, then now your target's here, much smaller than being patient, waiting for this higher low pullback, and then boom, look at the target there and the range that you're trading for, right? So just keep in mind that larger levels give you larger profit margins. Smaller levels give you smaller profit margins, meaning that your risk needs to be in check, right? You cannot essentially look for a breakout of this range here and put your stop loss underneath the bottom. That's a one-to-one. That does not make sense from a trading perspective. Therefore, just make sure your stop, your risk, your targets, make sure it's aligned with the proper time frame and scale of the trade that you're targeting, okay? That's all I would say about MATIC. All good, again, as long as we're above 83 cents. If we break the support trend line, maybe that's a different story. Really, it would just get us to 74 cents, but 74 cents is the gatekeeper ultimately for lower. Okay, so support trend line, first test 74, and then after that, okay, maybe there's lower, but this chart pattern here going sideways, it just strikes me as bullish digestion, really, of this overall move from right around in here. All right, time to get down to the fun stuff, the memes. What's going on in Shiba Inu? Why did this make the cut today? I hope you could see it before I even drew it in. Look at this breakout point that's forming here. Look at this ascending triangle. Look at all these higher lows. The chart pattern, just based on pure technicals, looks good. On a weekly time frame, you could also start to make the argument that this is a really, really long and drawn out inverted head and shoulders, and this is the neckline breakout area. If we look left, where is the next resistance that we are potentially headed towards on a sort of retracement, if you will? Probably closer to here, right? Probably closer to, what is this? We're going to go 1933, of course, with 4 zeros before it. So nothing magical has happened in Shiba Inu. It's not trading up around a penny or anything even remotely close to reasonable numbers to discuss. So every number I discuss in Shiba, of course, has 4 zeros in front of it. So 0.000, that was 3, 0, 1256 is your breakout level here. So 1256 with 4 zeros in front of it. If it breaks, there's reason to believe it could run through this area of fairly thin structure to the upside. Okay, so that's what we've got, and our target is 1983. Not interested in the trade if it never breaks it, or if it just comes down underneath the support trend line. I've already got like a million Shibas in the bank. That's not really saying much, obviously, at this price point. I'm probably not going to trade it. It's just something interesting that I'll continue to watch, essentially. I believe the Shiba came from like a Webull referral or something like that. Crazy. Anyways, I've got a million of them. So if it does go to $1, I'll be a millionaire. That'll be great. But I doubt that that will happen. Anyways, next up, last but not least, Flux. Why am I bringing this chart up? Well, there's the possibility that if we are seeing a bit of a crypto bottom, look at this as a rounded bottom. Can we put in a cup and handle? And if so, breaching these highs right here around 95 cents to $1. Treat this as a bit of a zone, okay? So something that looks roughly like this. Where's $1? There it is. If we can crack that, look left on this chart. Oops. There we go. Notice that just like Shiba, there's a decent chunk of overhead room to run. The skies kind of open up just a little bit here inside of Flux. And I really like the rounded bottom activity, the nice volume that's coming in here as we're seeing these aggressive days to the upside. I would not chase this long up here. Always remember, excuse me, that in crypto, it's all about who can dump on you, who can sell, right? Who can sell for a profit and essentially, beat you in the trade ultimately. So anyone who is building a position down here, building a position in here, those people are the people who can sell up here, and all of a sudden you get a pullback and the market fizzles out. So please don't be someone who just makes a knee-jerk reaction and buys this up at the highs. I would wait for a cup and handle, as we've just described. Ultimately, it's a bull flag in the short term with a rounded bottom, right? And then can we reattempt this and break it for that roughly 28-cent move, which on something that's breaking $1, not to insult anyone's intelligence, but 28%, that's definitely a trade worth watching for, right? So that's what I've got for you in the crypto report. If you enjoyed the video or learned anything new today, let me know in the comment section or by giving the video a thumbs up. Don't forget that the weekly watch list video will come out as regularly scheduled come Sunday, and I wish you all a green trading week.